My name is Richard Kemesh. I work as a consultant, currently working with the IFC, but working globally with countries trying to introduce ways to finance their mortgages in an innovative way in the bond market.
And that's really fitting because today you just had the round table discussing the introduction of securities mortgage in Uzbekistan. Can you give some insights into what was discussed and how this is going to be an important step for Uzbekistan?
I think, first of all, there's a very clear need for housing. The availability of housing credit for ordinary people is very limited. The size of the mortgage market is extremely small, given how vibrant the economy is, given how rapidly the population is growing. It's clear that we need more funding into mortgages. We also need more capital markets instruments in this country. I think that in order to get a vibrant fixed income market for pension funds, for insurance companies, for bank treasuries, we need it to be on the basis of high quality, safe, liquid assets. And what we're trying to do here is turn the need for mortgages into exactly those assets. And then a third need, we also need to attract foreign investment. We've got a lot of very boring, very staid investors in Europe, German pension funds, people like that, who are desperate to invest in safe products in new countries where they can get a better return than they can on German mortgages, for example. And they're always asking me, which countries are you going to? Where are we going to get the next opportunities to invest? And I think they're going to be extremely interested in Uzbekistani mortgage bonds.
What then would make Uzbekistan so appealing to them?
I think the fact that it's, well, clearly there's a huge need. There's a huge stable banking system, very strong regulation. We are working very closely with the regulator to put in place the best possible covered bond law. And quite simply, it's going to be a better yield. We've seen quite a few Uzbekistani banks come to the market already. For various reasons, they had to go into emerging markets portfolios. They've had to pay quite high yields relative to their underlying credit strength. If we can produce something which overcomes that, gives you a better credit rating, and still gives a better yield than you can get for a German mortgage bank, that's very, very appealing.
Well, speaking of ratings, Moody's was a part of the discussions. Do you have any insights into which rating entities will be in charge of the ratings? Is it only going to be international? Because I'm aware there are 3 rating companies here in Uzbekistan as well.
Yeah, I think there are domestic ratings and there are international ratings, and both of them are equally valid. I think a local investor is going to care about local opinions, local knowledge, local rating appraisals. Also, for local investors, we have to put in place rules about how they can buy covered bonds. Are they allowed to treat them in this portfolio? How do they treat them for that ratio? That kind of topic. And that will be based on local ratings. But when we come to selling it internationally, which was a few years down the line, but I'm an optimist, when we come to selling it internationally, we're going to need international rating agencies, such as Moody's, other rating agencies are available, who have the confidence and the objective approach. They use the same methodology to approach rating a covered bond in every country. Yeah, they respect national specificities, but if it gets a rating in this country, it's comparable to the same rating in a different country. And that's very important to international investors.
And do you know if the rating companies will look at the individual mortgages within the securities and as well as issue ratings separately for the issuers?
Yeah, there are 2 different products here. There's securitizations and covered bonds. In the case of securitizations, the issuer's rating is much less important because they don't have recourse to them. All you can look at in a securitization is the underlying mortgage. So it's vitally important to understand how good the mortgages are. And everything I'm hearing about the local mortgages is they're pretty creditworthy. They're a good, safe bet. In the case of covered bonds, it's dual recourse. So you look at both the rating of the bank and the rating of the underlying mortgages. You have to top up the pool with performing mortgages. If something goes into arrears, you have to replace it. So it's less important, but still they're going to want to be comfortable that the mortgages are high quality. And it will be up to every bank to show them how they originate, how they credit score, how they underwrite, their collections procedures, to tell the story. It's a great story about the underlying mortgages.
And I heard some comment about the loan performance of some of the local banks, and the central bank actually yesterday released their MPL report. It surmounted to about $1.8 billion of non-performing loans with an average of about 5%. Do you have any insights on that?
I think every country is in a different place in terms of the credit cycle. within a country is what I care about. And generally speaking, residential mortgages are about as safe as it's possible to get. That's the first thing that people pay. They want to stay in their house. It's the safest product. Now, credit cycles come and go, NPLs come and go, but usually within any given country, the best bet is the individual paying the money for his home or her home.